Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the Financial Markets Quality Conference at Georgetown University's McDonough School of Business. Joining me for this segment, we have Dave LaValle. He is the U.S. head of SPDR Capital Markets over at State Street Global Advisors. Thank you so much for joining us at Georgetown. Now, you're about to sit on the Exchange Traded Product panel, and that seems to be a hot topic regardless of what conference we're at. What's its role in the capital markets, and why do they just continue to pick up steam?
Yeah, so Jill, thank you for having me here, and I'm also an alumni of Georgetown, so extremely happy to be here. The reality is that ETFs are typically thought of as investment vehicles, but the truth is that they're oftentimes used as capital markets vehicles or exposure vehicles. And so when people think about this notion of ETFs versus mutual funds, that's kind of on the investment side. Of ETFs, but then on the exposure side, ETFs are really competing with futures and derivatives and CDX and TRS and all sorts of other exposure vehicles. And so ETFs are a vital and critical component of the broader capital markets.
Now, there are so many ETFs that are out there right now, and we see thematic ones introduced every day.
Right.
Does it seem as if the space is saturated?
Yeah, so we don't think that the space is saturated, but we also don't think that every product is going to succeed. So we've actually closed more products than we've launched in the past 3.5 years, and we're really proud of that. But we're making sure that when we bring products to market, two things can happen. One, that there can be vibrant liquidity that is brought to that product, and also that there's a demand profile. So we have a good investor base that we're targeting, and we also have a proper liquidity profile as well.
Where are you continuing to see the most flows?
So we're seeing a lot of flows. Obviously, it's thematic. We're seeing increased volumes in some of the most actively traded products that we have. So that would be SPY, our sectors, our industry products. So when we see volatility pick up and the VIX pick up, what we do is we see a higher velocity of trading and more volume that's trading. So over the past couple of weeks, in the past couple of weeks, we've seen SPY trade 3.5 times its average daily volume in excess of 60 billion notionally in one day. We've also seen a pickup in fixed income ETFs. We've seen a pickup in assets in fixed income ETFs. So we feel in pretty good shape with our suite of products.
Do you think this volatility regime may continue over, at least for the remainder of the quarter? I mean, there are a number of risk events on the horizon.
Yeah, so I think what we're going to continue to see is episodic volatility. So we're going to see episodes of volatility that are related to other things that are happening in the capital markets or other things that are happening geopolitically.
All right. Thank you so much for joining us.
Thanks so much. Appreciate it.
Thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.